So the main function of a factor is to collect the credit or receivables on behalf of the client. See, it's not just that collecting the money from the buyer. Along with that, it provides other consultancy services. Let us see what are the functions that has to be performed by a factor. Now, who is a factor? That is the person who collects money on behalf of the organization. So here the factor has to maintain proper account. So based on account receivable, what is the actual amount which is received from the customer? Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Today we are in the second session of Unit 5, that is factoring. So my dear students, now we shall quickly recall what we have discussed in a previous session. So in a previous session, we have covered this topic, that is introduction to factoring. So we have seen that what is this factoring is all about and from which word factoring is derived. So hope you remember, factoring is derived from the word facia, which means to what? To do things or to get things done. And we have learnt about meaning and definition of factoring. Next, we have learnt about objectives of factoring. So, what are the main objectives of factoring? And we have studied various types of factoring. So, these are the few topics which we have already discussed in a previous session. In today's session, we shall continue with new topic, that is process of factoring, or it is also called as factoring mechanism. Let us see what are the various process of factoring. So my dear students, I have already told you. So those organization who goes for credit sales, so such organization will opt for this factoring. Now let us see what is the process of factoring. That is the firm or client having book debts, in the sense the debt which are yet to be received from the customers, having book debts enters into the agreement with the factoring agency or institution. So I have already told you, those organizations which have sold goods on credit basis, they go for this factoring process. The client delivers all orders and invoice and the invoice copy arising from the credit sales to the factor. Now think that this is a company which have done the credit transactions. So here they have done the credit transaction. Once they do the credit transaction, so they will get the bills receivable or account receivable. Now what the factor will do? The first process of the company is to transfer all the account receivable or bills receivable to an institution or an agency which is called as factor. Now the organization have transferred all the bills receivable or account receivable, or it is also called as debtors, to whom? To the factor. So this is your first step. The factor pays around 80% of the invoice value depending upon the price of factoring agreement as advance. So there is an agreement between these two parties, that is the company as well as the factor, which is called as what? Factoring agreement. So the agreement between these two is called as factoring agreement. Now what the company will do, as I told you, the company has delivered the bills receivable or account receivable to the third party, that is called as factor. So there is an agreement between the factor as well as company. So what the factor will do? Factor will pay 80%. So it will give 80% of the cash of the invoice, 80% of the invoice as per the factoring agreement. The balance amount is paid when factor collects the complete amount of money due from the customer. So what the factor will do? Of course, it will pay 80% of the invoice price and rest 20%. So rest 20% will be paid once it receives. So once the factor receives from the customer, the other 20% will be paid to the company once it receives the full amount from the customer. Against all these services, the factor charges some amount as service charge. So for working on behalf of the company, for collecting the amount on behalf of the company from the customer, so it charges some amount which is called as service charge. So this is a charge which is made by the factor, that is for collecting the amount from the customer. Or in certain cases, the client sells its receivable at a discount, say 10%. Now here, what the client will do, that is what the organization will do. So organization will sell the bills receivable to factor at 10% discount. So there may be a chances that the organization will sell the bills receivable to the factor at 10% discount. This means that the factor collects the full amount of receivable and pays only 90% in this case of the receivable to the client. So if the organization has sold the bills receivable at 10% discount, then what the factor will do? Factor will not give full 100%, it will give only 90% of the invoice price. From the discount 10%, the factor meets its expenses and losses. The balance is the profit or service charge to the factor. So remaining 10% which is not given by the factor, so this 10% will be used by the factor for the expenses which is met by this process of collecting the amount from the customer. Thus, there are three parties. Who are the three parties under factoring? One is the client or the debtors, that is they are the buyers of the goods. So one who has purchased the goods from the organization, that is client, the seller of the goods. So the organization who has sold the goods, and the other one is the factor. Now who are the three parties here? The buyer who have purchased the goods and the seller who have sold goods to the buyer. And the other third party is what? That is factor. Now the duty of the factor is to collect the amount from the buyer and give that amount to the seller. So there are three parties, that is buyer, seller as well as factor. So factoring is a financial intermediary between the buyer and seller. So here this factor acts as an intermediary between buyer as well as the seller. So this is about the process of factoring. Now let us see what are the features of factoring. So if you see the first feature, factoring is a service of financial nature. Of course, it is one of the important financial service which is provided by the financial organization. So factoring is a service of financial nature. So it involves conversion of credit bills into cash. So of course, this credit bill will be purchased by the factor, and in return for that, the factor is going to give the cash. So it's nothing but what? Conversion of credit bills or account receivables into cash. So account receivable and other credit dues resulting from credit sales appear in the books of account of book credits. So all these transactions will appear in the books of credit book. And the next feature is that the factor purchase the credit or receivables and collect them on due date. So of course we know that, so whatever the amount of account receivable that has to be collected, so it will be collected by the factor on due date. Thus the risk associated with the credit are assumed by the factor. So here along with the collection of that amount, here the risk is also borne by whom? By the factor itself. A factor is a financial institution. Of course, we know a factor is what? It is a financial institution. It may be a commercial bank or a finance company. So it may be, or the factor may be a commercial bank or the finance company. It offers services relating to the management and financing of debt that has to be collected from the customer, and that amount will be transferred to whom? To the organization, that is one who has sold the goods on credit basis. So it acts as a financial intermediary between the buyer, that is the person who have purchased the goods, and the seller, that is the organization who have sold the goods. And the next feature is that a factor specializes in handling and collecting receivables in an efficient manner. Of course, it is duty of a factor to collect the amount that has to be received from the customers in an efficient manner. That is, on the due date, it has to collect the amount and give the amount to the seller. And the next one is factor is responsible for sales accounting, debt collection, credit monitoring, protection from bad debts, and rendering of advisory service to the clients. So it is a duty of a factoring. It's not just that collecting the money from the buyer. Along with that, it provides other consultancy services like it provides advices, guidelines to the clients, that is the organization. Factoring is a technique of receivables management. So why it is called as a receivables management? Because keeping that receivable, factor is going to take the risk of collecting the money from the customers. So it is used to release fund tied up into receivables, that is credit given to the customer, and solve the problems relating to collection as well as default of the receivables. So on behalf of the organization who have sold goods to the customer, on behalf of that, here a new person has been entered, that is factor. Now the duty of the factor is to collect the information or collect the money from the customers on credit basis. So these are the few features about factoring. Now let us see what are the functions of a factor. So let us see what are the functions that has to be performed by a factor. Now who is a factor? That is the person who collects money on behalf of the organization is called as factor. So if you see the first function, that is provision of finance. Of course, by keeping this account receivable, here the factor is going to provide the money to the seller, that is the organization or client. So it is a provision of finance. So receivable or book debts is a subject matter of factoring. Of course, factoring is nothing but what? That is conversion of account receivable into cash and providing immediate cash to the customer. So a factor buys the book debt of his client. So this all we know. So here the factor is going to buy the book debt of the client. Generally, a factor gives about 80% of the value of receivable, and remaining percent will be given in the form of advance. So here 80% will be given in the form of advance and remaining 20% will be given on the date of receiving the amount from the customer. So upon that also he will deduct 10% as his charges. So there may be a chances where factor will deduct 10% of the total amount as service charges for rendering the service to the customer. So thus the non-productive and inactive current assets, that is receivables, are converted into productive as well as active assets. So these receivables are going to get on receivables we are going to get the cash in the future, right? So using that receivables, so here the factor helps in converting that receivables into productive cash, which will help the organization for the investment. And the next one is administration of sales ledger. So a factor maintains the sales ledger of every client. So here what does the factor will do? So it will maintain a sales ledger of each and every client. It's nothing but organization. So when the credit sales takes place, the firm prepares the invoice in 2 copies. Now, so if the goods are sold on credit basis, then the firm will prepare invoice in 2 copies. So invoice is nothing but what? The documentary evidence in support of a transaction, right? So that is an invoice here. So when credit sales takes place, so here the seller will prepare invoice in 2 copies. 1 copy is sent to the customer. So here 1 copy is sent to the customer. So on the due date, customer will make the payment. The other copy is sent to the factor, because even the factor has to know what is the amount that has to be received from the customer, right? So it will be prepared in 2 copies. 1 copy will be given to the customer and the other copy will be given to the factor. So entries are made under ledger in open item method. So here entries of these transactions will be made in a proper ledger. So in this method, each receipt is matched against the specific invoice. So each receipt, so whatever the factor is going to receive from the customer, so for that it will be matched with the specific invoice. The customer account clearly shows the various opening invoice outstanding on any given date. So here the factor has to maintain a proper account, that is the amount that has to be received from the customer, at the same time what is the amount which is given to the organization, that is the client of the factor. The factor also gives periodic report to the client on the current status of his receivables and the amount received from the customer. So this I have already told you. So here the factor has to maintain proper account. So based on account receivable, what is the actual amount which is received from the customer and what is the amount which has been delivered to the client. Thus, the factor undertakes the responsibility of entire sales administration of the client. So, whole sales administration. So, here the risk of organization is transferred to a third person who is called as factor. So, whole risk of sales administration will be borne by the factor on behalf of his client. And the next third function is that collections of receivables. Of course, on due date, here the factor is going to receive the amount of receivables. So, the main function of a factor is to collect the credit or receivables on behalf of the client. So, client means what? Here the organization. So, on behalf of the client and to relieve him from all tensions, problems associated with collection of money from the customer. So, as I have already told you in the previous slide also, so on behalf of the customers, on behalf of the organization, here the factor is going to receive the amount from the client, right? So, this enables the client to concentrate on other important areas of business. So, this also helps the client to reduce the cost of collection. So, here the organization or the client of the factor does not worry about collection from the customers, that is the amount due from the customers. So, it can go on doing the activities as they were doing earlier. So, here what is the duty of the factor? To collect the amount and give that amount to the organization. And the next one is protection against risk. Of course, I have already told you here the risk of the organization is borne by whom? By the factor. So, if the debts are factored without resource or risk relating to the receivables, that is bad debts. So, if there is any bad debts, so if there is any chances of bad debts, so what do you mean by bad debts? The amount which has to be given by the customer is not given. So, that amount is called as bad debts. So, if there is any bad debts, so it will be taken by whom? By the factor itself. So, because 80% of the amount will be already given to the organization, remaining 20% they will give at the time when they receive from the customer. Suppose if the customer have not given the amount, so that amount is called as what? Bad debts. So, that whole risk of bad debts will be borne by whom? By the factor itself. The factor relieves the client from the trouble of credit collection. So, here the factor relieves himself or relieves the organization from the credit collection. It also advises the client on the credit worthiness of potential customers. Along with that, along with the collection of money from the customers, it also gives information to the organization about the credit worthiness of the customer. In short, the factor protects the client from risks such as default and bad debts. So, here the whole risk will be borne by the factor itself. And the next one is, fifth function is credit management. So, the factor is consultation with the client fixes credit limit for approved customers. So, here credit management will be done by the factor itself. The factor in consultation with the client, that is the organization, fixes credit limit for approved customers. So, within these limits, the factor undertakes to buy all trade debts of the customer. So, factor access the credit standing of the customer. So, here in order to collect the amount from the customer, first the factor has to see the credit worthiness of the customer, whether the customer is really able to pay the amount or not. So, based on that, it will select it will give agreement or it will have an agreement with the organization. So, this is done on the basis of information collected from the credit relating reports as well as bank reports, etc. So, before giving or before having an agreement between the organization as well as the factor, so factor will see whether the customer of the organization is able to pay the amount or not. So if there is a chances of bad debts, of course the risk has to be borne by the factor itself, right? So in such cases, what the factor will do? Factor will first check the credit worthiness of the customers of the organization. So in this way, the factor advocates the best credit and collection policy suitable for the firm. So on the basis of that, the factor will agree for the agreement between this factoring. So in short, it helps the client in an efficient credit management. So whenever the organization requires the amount, so it can go for this factoring so that they can get the immediate cash from the factor. And the next one is advisory services. So I have already told you, it's not just the duty of a factor to collect the money from the customer. Along with that, it provides advisory services. So these services arise out of close relationship between the factor and the client. So there should be a close relationship between the factor and the client. Then the factor will give the advisory services. The factor has better knowledge and wide experience in the field of finance. Of course, the factor should have a wide knowledge about this financial sector, without which the factor cannot collect the money from the customers. So you should have a proper knowledge. It is a specialized institution for managing account receivables. So it is a specialized institution for managing the account receivables. So it possesses extensive credit information about the customer's credit worthiness and track record. So along with that, I have already told you, it also ascertains or it also gives the information about the credit worthiness of the customers. So with all this, a factor can provide various advisory services to the client. Besides, factor helps the client in raising finance from banks as well as financial institutions. So as I already told you, these factors will have specialized knowledge about the finance. So along with this factoring service, it also provides it also helps the customer by advising them to get the financial assistance from the financial institution. So in my next session, I am going to discuss about advantages of factoring, limitations of factoring and securitization of debt or assets. So these are the new concepts what we are going to discuss in the next session. So my dear students, in today's session, we have learnt about factoring. See you all in my next session. Till then, take care. Thank you.